Decentralized commerce agents will finally give us perfect markets. The combination of AI agents and crypto represent a fundamental realignment of economic coordination, says Justin Banon, founder of Boson and Fermion Protocols. Economists have long theorized about perfect markets, where buyers and sellers operate with complete information, zero transaction costs, and frictionless exchange. Despite technological advances, this ideal remains elusive in today's fragmented digital economy. Our current commerce landscape is siloed across competing platforms, each creating its own walled garden. Amazon, eBay, and specialized marketplaces for luxury goods may have digitized commerce, but they've simply replaced physical barriers with digital ones. These platforms deliberately maintain high costs and barriers designed to prevent users from migrating to competitors. Algorithms deployed by these platforms are trained explicitly to maximize revenue by adjusting prices dynamically based on comprehensive market data, often keeping prices artificially elevated depending on the broader internet pricing environment. Such practices result in significant price disparities for identical assets across platforms. Inefficiencies persist because the costs of exploiting them, such as substantial platform fees, lengthy onboarding requirements, limited interoperability, and time delays in transactions, typically outweigh potential arbitrage profits. When the cost to exploit a price difference exceeds the potential earnings from the trade, these inefficiencies remain entrenched, allowing platforms to maintain control over users. Today's platforms serve two essential functions. They aggregate supply and demand, and they establish trusted exchange mechanisms, but they operate with fundamentally misaligned incentives. Platforms don't work for users. They work for shareholders, with a fiduciary duty to maximize extraction. This results in market failures where platforms invariably exploit their position as intermediaries through high fees, manipulated search results, and proprietary ecosystems designed to lock in participants. The platform model is inherently extractive by design. The convergence of two powerful technologies is about to disrupt this status quo: AI agents and crypto protocols. AI agents can perform many platform functions, especially supply and demand aggregation, at a fraction of the cost. Unlike platforms, these agents work directly for users, fundamentally realigning incentives. Meanwhile, crypto protocols solve the fair exchange problem through low-cost, trust-minimized transactions where users only need to trust audited, immutable code rather than corporate intermediaries. The combination creates what I call decentralized commerce agents, AI that can efficiently discover price differences across marketplaces while using crypto protocols to facilitate secure, low-cost exchange. This dramatically reduces the total cost of arbitrage, suddenly making previously non-viable price differences economically feasible to exploit. Here's where it gets interesting. By enabling these agents to retain profits from successful arbitrage operations, they can strategically redistribute gains to incentivize adoption of decentralized commerce protocols. Each successful arbitrage can offer discounts to buyers, bonuses to sellers, and fund continued development of the agent ecosystem. This creates a powerful feedback loop. More users generate more transactions, which create more arbitrage opportunities, yielding more profits, which attract more users. Each cycle consolidates liquidity on decentralized protocols while reducing the viability of isolated, extractive platforms. The result is a steady progression toward that theoretical ideal of a perfect market. A single, liquid marketplace for all assets with minimal transaction costs, maximum price transparency, and efficient pricing. For consumers, this means lower prices, better selection, and truly competitive markets free from platform manipulation. For businesses, it means direct access to customers without paying exorbitant platform taxes. For society, it means markets that more efficiently allocate resources based on actual supply and demand rather than platform algorithmic manipulation. The technical pieces are falling into place. AI capabilities are advancing rapidly, while crypto protocols for decentralized commerce continue to mature. What's missing is the recognition of how powerful these technologies become when combined specifically to disrupt platform economics. Decentralized commerce agents represent not merely an incremental improvement but a fundamental realignment of economic coordination. For the first time, we have the tools to make perfect markets more than just a theoretical construct in economics textbooks. The question is whether we'll seize this opportunity to build a more efficient, accessible, and equitable commercial landscape for everyone.